Is the Southern California housing market experiencing doom and gloom? We are going to run through the latest sales numbers. We're going to give you a sneak peek at the median home price. And we're also going to cover the median list price and an interesting trend we're seeing in several Southern California counties. Hey there, Christian Walsh, real estate agent in Southern California. We have been helping buyers and sellers make the best data-driven decisions during these crazy days. And we are here with the latest Southern California housing market report. So if you're ready to dive into the single family, multifamily sales numbers for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button and let's get started. Let's dive into the Southern California numbers. What do we see? Is it doom? Is it gloom? Well, the only gloom we're seeing is in the ridiculous May gray and June gloom. At some point in time, theoretically, we'll see the sun come out. Is the sun out for the housing market? Let's dive into the numbers. So we are going to first cover single family homes, then we'll dive into multifamily. What we're comparing is we're comparing May from the 1st to the 31st for 2023, going back year over year, all the way back to 2018. We had a great question. The lines in between, does that have any correlation to any data in between? The short answer is no. The lines actually are just connecting the dots. They're not meant to represent any time periods in between. That's a great question. We're looking at sold properties. We're looking at properties that are going under contract. So that's buyer demand. We're looking at new listings. That's supply. You can see the dip in 2020 due to COVID, then things rallied back in 2021 and 2022. But you'll notice invariably that active listings is continuing to drop and has not returned to pre-COVID levels for just about any county in Southern California. And in fact, right now in 2023, we're at approximately half of pre-COVID levels for new listings. We see demand is down as well. Not at crazy record lows, but that's down. And that gap between new listings and pending sales is very close. Now, what's the reason for the drop in new listings? Well, several reasons. One is the interest rates. A lot of folks still have their 2.5 to 3.5% mortgage interest rate, and they're not going to sell and step into a 6.5 to 7. So they're going to hold on to their properties. It's much less incentive to list. And there's bad news out there. Everybody keeps talking about a housing market crash, although values continue to go up, and we'll dive into median home prices. And then the other challenge is some sellers who would make a move into another property when inventory is low have no option to buy into something else, and it gums up the system. So that's why we're seeing new listings down right now. Moving into Los Angeles single family, record low new listings for this time of year over year, and we see demand is down, but not as far down as it was in 2020. So we're actually at a stronger level of demand. The closest gap between new listings and pending sales that we've seen, at least in May's going back to 2018. See where we are with low inventory, nowhere near the pre-COVID levels, a little more than half of pre-COVID levels. Now, we do expect to see more as some landlords start to bring their properties to the market. We're talking to several landlords as well, but it's going to take a lot of homes to get back to the pre-COVID level from a listing standpoint, and we will need more demand as well to get back to those levels. Riverside, another market mirroring the rest of Southern California, inventory way down and demand still relatively strong with that tight gap between new listings and pending sales, similar to where it was in 2020 and 2021. So definitely a solid market for sellers still, unless we get some sort of wave of inventory, which seems highly unlikely. San Bernardino, inventory down, demand down, but still relatively solid. Maybe I should have just recorded my voice saying that once and just overlaid over all the counties in Southern California. Ventura, demand down, supply down, but still a solid market. Close gap between new listings and pending sales. I'm just saying the same thing over and over. San Diego, let's see if we have anything new, and I will show you something interesting about San Diego when we get to the Altos Research data. Very low levels of inventory in San Diego, less than half pre-COVID levels for the number of new listings, and we have down demand, but still closer between the supply and demand, that gap, than we've seen in years past at this time of year. And it's the same trend across all Southern California counties for single-family sales. Diving into the Southern California multifamily numbers, one of the only places you're going to get this data, especially on a regular basis, we're here with the May numbers going all the way back to May of 2018, comparing year-over-year data. We can see 2020, just like single-family, we had that dip due to COVID. Things slowed down from a listing and escrow standpoint, and it was a different trend. I've been covering the data since then. Multifamily took a little bit longer to slow down initially, and then it took a little bit longer to come back, but it has since rallied. Now, what is slowing it down now? You can see here in Orange County that the demand, the number of properties under contract, we've got a large gap between new listings and the properties going under contract. And what is that? Well, it is the fact that interest rates have gone up. It is tougher for a property to cash flow when you're acquiring at a higher interest rate, because you subtract the cost of debt service from the net operating income, and what's left over is cash flow. So if the interest rate's going to be eating up your cash flow, you may not be as compelled to pay as much for a property. So that's what we're seeing. We're seeing a disparity between sellers right now in multifamily and buyers. The sellers think their value is one thing, buyers think it's another. The irony being that many of these sellers are going to be 1031 exchange buyers themselves. They're going to be out there buying. So they will soon see what it's like to be on the other side of the deal. And Los Angeles, inventory is down and demand is down as well. That is an area where the eviction moratorium just ended a couple months ago. So if a landlord was looking to sell but had non-performing tenants that weren't paying, there was nothing they could do. Now there's something they can do about it, and some of those folks are being evicted if they haven't started paying their rent. So LA is different in that respect. Of the Southern California counties, LA was the last one to have an eviction moratorium in place. Most of them let it end when the statewide eviction moratorium ended. So you can see Riverside, demand is low, even lower than COVID 2020 there, and supply is low. So the gap is pretty similar to some of the years past, but things are definitely slowing in Riverside for multifamily. And that, again, is due to interest rates getting as high as they are and making it tough for cash flow. San Bernardino, we can see demand down, supply, and that gap is actually one of the larger ones. Not as large as 2018, crazy number of listings then, but another market where interest rates are having an effect on demand. Ventura, you're always all over the place, so it's hard to tell from a multifamily standpoint exactly what's going on. We can see supply and demand are down. So ironically, in Ventura, it may be the most seller's market for multifamily that we have compared to the others. There's just fewer buildings in Ventura County than any of the other counties we cover. That's part of it, a lot more open space. And then San Diego, another market similar where demand is down. Not as crazy low as perhaps Orange County, for example, but demand is down, supply is down too. So that gap is similar to 2022. This market seems to be moving along a little bit more solidly than Orange County. So there is your multifamily market update for Southern California. And don't forget, we're real estate agents based in Southern California. Feel free to reach out for no pressure, no obligation discussion about your real estate needs. And here's a little sneak peek at the median home price for Southern California counties. This can change. We've seen as we get closer to the middle of the month, they crunch some numbers a little bit more, and these numbers themselves will change. So we'll check them out in the middle of the month and see if there really is a change. We did predict, because especially in Orange County, where we saw the dramatic run up into April for median home price, we did predict that things would start to look better year over year for median home price as we see the drop in Orange County. So we're still in Orange County, we're down 3.8%. LA is down 7.2%. That's a big year over year difference. Riverside 3.6%. These are much lower, except for LA, than we saw for April, especially for Orange County. This number will get better, and we may start to see it flip positive. Let me know in the comments below when you think it will flip positive. And the three other counties for Southern California, we can see that they are increasing month over month. So we can see the numbers have gone up. Year over year, we're still in negative territory, but it's a smaller negative territory. San Bernardino was actually pretty level, and then now is at a negative, but we will see. I again predict in the next few months that things will start to look better year over year for pricing. That is a sneak peek at the median home price. Not as bad as it was in April. And again, give me your predictions in the comments below when you think it'll go positive. I think it could be as soon as when I run through the numbers for June and maybe July. Diving into the Altos Research Report, some of my favorite numbers. Let's take a look. We're going to look at the county level. And don't forget, if you've been watching these for a while, you know I talk about it all the darn time. You can put in any city or zip code anywhere in the nation and sign up to receive those reports. So you will get these numbers. You can also sign up for the county level. And I will say, well, there's not much inventory, so some city or zip reports are pretty boring because there isn't much going on. But let's take a look at the county level, see what we have going on. There are some changes. First things first is the market action index. In here, there's a summary of the market action index. And what it's saying is that this month it was 58, last month it was 58. And that's a change. If you've been watching these, you've seen that this month has typically been a much more of a seller's market than last month for all the counties. And it has plateaued or gone back a tiny bit. So that's a trend to watch. Now, we are getting out of the busy spring buying season, but there's a lot of people who still couldn't buy. There wasn't enough inventory. So I do expect us to move along at a solid clip. Let's dive into another number that I really haven't covered much, but is relevant and something we should look at. And that is the median list price. We are looking at the median list price. This is all listings on the market right now, not just new listings. So everything that's on the market in Orange County for houses, this is just house data, adds up for a median of 1.8 million. And of course, you can see that that median has gone up. June 2018, properties weren't selling for as much. So of course it's going to go up, but this is a record high for this time of year, and it doesn't look like it's slowing down. Now this could lead to one of two things, and this is why it's important to look at. One is this could lead to an increase in the median sales price. This is the list price. If these homes close for a number close to this, at this, and this is the median that's out there right now, that could push up the median sales price. So we'll have to see in the months ahead if that happens. The other thing it could do, quite frankly, is it could lead to the market to slow down because there isn't enough inventory at lower price points for things to trade. And we're seeing, if you look down here in the market segments, the first quartile, the lowest quartile, 2 weeks. Anything that's listed is going very quickly. And even at the top, 70 days, which is compared to some of the other counties is not that long. In a normal market, 70 days would not have been long for most of the other price points, but things are moving fast. Also, when you look at new listings, this line versus absorbed, which would be properties going under contract, these numbers are much smaller than these in many cases. You can see that the new listings in the lowest quartile are half of the absorbed. So this is a hot market in Orange County right now. So it'll be interesting to see what happens if we continue to push this median home price. And I can't wait to show you San Diego. They'll be last, not because I'm trying to make you stick around. It's just because I always do them last. It's interesting to see what's going on with the median home price there for listings. Moving into LA, we can see that the action market index 51 versus 51, it has plateaued. Still a seller's market, all of Southern California seller's market, but we're seeing a plateau in the market action index. Looking at the median list price, we can see that it is up. It's not at a record level like we just saw with Orange County. This is where it was at the same time in 2021, but still could be pushing values up or lead to a slower market. And we can see a similar thing. The top of the market in LA is taking 91 days, so that is definitely longer. And all of these, so 28 days for the lowest quartile, that's double what it is in Orange County, but definitely still seeing a similar trend where the new versus absorbed, there's less inventory that has come to the market versus absorbed. Riverside, we have the market action index 50 and 50. That hasn't changed. Similar number to Los Angeles. Median list price is up, but not a crazy record as compared to last year. Very close. Up over time as median home prices have gone up. So this doesn't seem to be a crazy record median list price level. Looking at days on market, interesting, the bottom quartile taking longer than the middle two. So that's a different trend, but still we can see that new versus absorbed, These are solid levels of inventory going under contract in Riverside. San Bernardino Market Action Index plateauing at 49. Median list price is actually lower than it was last year at this point in time. So what this could mean is that once these properties actually close, we could see potentially more of a drop in the median home price. We did see that when we took a peek at the numbers. Or we can maybe see an increase in the number of folks buying because maybe prices are dropping to a more affordable level. And what do we see when we look at the different market segments? We can see that other than the third quartile for San Bernardino, new versus absorbed is higher. And then we can see the bottom of the market, it's taken longer. The rest of the market is moving faster than the very bottom in San Bernardino. Ventura Market Action Index dropped 1 point, not much, but look at that median list price. That has gone through the roof, and it is much higher than years past. So this, again, could lead to a slowdown in the market. That is where I think things will go for Ventura. It tends to march to its own drummer, like I always joke. You can see the top of the market taking 90 days. Like LA, bottom of the market moving faster. So interesting big jump in the median list price. Not much available from a house standpoint in the lower price points. And San Diego Market Action Index has dropped 1 from 69 to 68, but that's the biggest market action index, the most of a seller's market anywhere in Southern California. So we see that in San Diego, and we've seen that for a while. Now look at what is going on for their median list price. It is up dramatically. 1.4 is a huge increase year over year and huge increases years past. So again, this could lead to an increase in the median sale price when these close, or it could lead to a slowdown in the market. Look how fast things are going for the bottom quartile, 2 weeks, and everything's moving fast. So I always say it, Orange County and San Diego's sisters from different misters, brothers from other mothers, similar stats in those two counties, except San Diego is more of a seller's market. So keep on tracking. Make sure you sign up for these Altos Research Reports so that you get this data sent to you every week and you don't have to wait every 2 weeks like you have to with me. Are you seeing any doom or gloom in the Southern California housing market? Let us know in the comments below. Sign up for those data-packed Altos Research Reports, and as an added bonus, you'll receive our free weekly email newsletter so the updates come right to you every Sunday. And if you like this housing market update, you're not going to want to miss this one. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associate, Berkshire Hathaway Home Services, and we want to hear from you.